Hi, everyone, and welcome back to AI Interconnect. I'm your host, Lauren. And on this show, I speak with funders, investors, and operators to understand what is truly working across AI, tech, and innovation ecosystem. And today I'm joined by Fabrice Serfati, partner at Ignia Partners, and a venture capital firm investing in high growth technology startup across Latin America. Fabrice, thanks for being here. Very, very happy to have you on the show.
Laurent, it's a pleasure to be here. Thank you so much for having me.
Wonderful. Yeah, it's going to be cool. Then let's start with I'd like to start with your background so listeners understand the path that led you here. And I mean, you work closely with entrepreneurs and innovation every day, and that exposure give you a very unique lens on both markets and technology. Fabrice, how did your personal and professional journey lead you into venture capital and your role at Ignia Partner?
So thank you so much. It's really nice to be here. And I wish I had a very structured answer for you on how I did actually end up doing VC in Latin America. I guess I'm a lucky guy. What can I tell you? Life has taken me to do something that I love. Working with entrepreneurs every day is challenging and is feeds in many ways my intellectual curiosity, and I'm really glad I'm actually doing that. I started my professional career as a banker, as a structured finance guy. I was there like for almost 10 years in Mexico and in New York for Banco Santander. And then life took me to be in charge of one of the largest debt portfolio of a public company in Mexico. It was a glass company called Vitro. So all my background always in the financial piece of the business, but in the last part, much more as an operator. So I understood the relevance of financials within companies, which when you look at it from a banker, you kind of do a transaction and you're pretty happy that you actually did it. And some cases you do money, some cases you don't, but at least it's just a transaction. But when you look at it from an operation standpoint is very different. And then I understood that the relevance of these transactions for entrepreneurs, risking partnerships with financial partners such as ourselves, it's a big thing. And it implies dilution for them, which obviously from their own creation, it's giving away part of what they're building. So it's a very relevant and complicated decision. 2007, we decided to launch Ignia as our first fund. It was at that time a $100 million fund, which invested purely in Mexico. And since then to today, we've launched 3 main funds and a lot of SPVs. We have roughly $500 million of assets under management at this point. Again, I guess it was serendipity. That's how I got here, and I'm super happy to be doing this. Yeah.
I love it. Very cool. This is great. Ignia is already almost 20 years. 2007. Yeah, wow. A
Yeah.
half a billion. That's beautiful. Was there a defining moment where you realized investing in startup was the right thing or the right path?
So I think we kind of got early to the party in many ways. 2007, we started with an impact investing fund. That's what we were trying to do. Part of our purpose as we fundraised and we deployed those $100 million was to generate change through investing in entrepreneurship in a region that hasn't seen that much investment and that has not seen that type of investment before. So that time was complicated because there was not many people investing. So we had to carry on our backs the investments we did. Technology was not as developed as it is today. At some point, I mean, it's crazy to think about it, but we had a company that had like small banking branches in mom and pop stores in many places in Mexico. And one of our thoughts at some point, or one of our discussions on the board of that company at some point, was actually to buy a telecom concession from the government to actually connect those mom and pop stores. Now you don't even think about it. I mean, connection just happens, right? It's just natural. It's not, you don't need to build connections. Connections are there. You just hook up into them. So things have been changing a lot. Now our strategy has changed in a way in which we invest in international entrepreneurs that understand the huge opportunity that there is in Latin American market, and we help them come into these markets. We don't, right now we're investing at a vintage 2023 fund, another $100 million fund. Most of what we're trying to do is help recurring entrepreneurs, because that's something that also changed in the industry. Now you see people that have been around like for the, probably as long as we have, and they're doing their third startup, and they know they know the loop, they know the build the business, and that's the guys we're looking for, and try to help them come as a strategic local partner into Latin America. The other thing that has changed a lot, and I guess we are going in that direction in this conversation, is when we started investing, technology was important. In our second fund, which was a 2015 vintage, if you don't have a technical co-founder, we just wouldn't go there, just because you needed to have this huge advantage of someone knowing how to code within the company. And now it's not that relevant anymore. Now you don't need to have the technical CTO. Now what you need to have is someone that vibe codes or that understands, technology, AI and all of that. So many things have changed in this journey. I think what has remained constant, and that is super relevant for us, is we need to be able to create partnerships for the long term, kind of separating the financial piece of what we're doing and bringing on much more the partnership piece into it becomes super relevant. And that has been something that comes with, maturity and age and kind of understanding what we're doing. And that has been one of because again, and sorry for my long answer, but we're not getting any younger. And now the entrepreneurs, when I started this, I used to be like, 30 years old, 35 years old. And so I was pretty much the same age as the entrepreneurs. Now I'm a 55 years old guy, which is continue to deal with people that are 35 or 40 years old, right? So bringing that equation into the building of the partnership is also something very interesting. And, that's kind of what I've been learning in the last years.
Yeah. Well, that's very, very interesting. Yeah, I mean, funders, I'm not getting any younger either. Or they stay young at the beginning. Okay, and what are more, um, are you more attracted by market size, team quality, or execution signal first?
So we invest in what we would define as early stages. Not as early as it would be seed. We would try to invest our first ticket into a company in a seed extension or a pre-series A. So there's a confirmation of traction. There's a confirmation of a market. The way we invest, because, we have a lot of scars on our back, 40% of our fund is invested in first tickets. And we keep 60% of our fund for follow-ons. So our way to get to meet really the founder comes from our first ticket. But then our idea is to continue following up on those big investments, because a couple of things. One of them, follow-up is fundamental for the success of the company. And having an early investor following up on investments give comfort to later stage investors to actually come into the company. So it's our way to support part of our portfolio that we are building. So, in many ways, our thesis lies on our ability to continue investing. So we will kind of build that relationship throughout the time and make sure that we're able to continue supporting. In some cases, we just don't continue funding just because the company went sour and some things didn't happen and all of that. But what we have seen is the ability of the entrepreneur to be successful is very related to his ability to actually fundraise. And our role into that is also super relevant. So that's a fundamental part of how we do business with the entrepreneurs that we have in our portfolio.
Love it. And what makes a company stand out in your pipeline compared to the rest?
Right. Many things. One of them is the experience of the entrepreneur. It's fundamental. I mean, we need to see that the person, the entrepreneur, has done this before and has done this before in a way that he goes the whole cycle and it doesn't have to be like, the founder. He can be part of a team, but there's different cycles in our business. And if you don't complete the whole cycle, you just don't complete the whole business cycle, which means if you don't sell a company, you only learn to sell the company when you go through that process. So, building the company, growing the company, scaling the company, attracting talent, bringing on new clients, and then finally at some point exiting the company is super relevant. Another important thing is we obviously look for companies that are interested to come into our Latin American geography, just because we don't like to be passive investors, just putting the money and, kind of waiting to see what happens is not our thing. So that's why we are attracted to fintech sector, health tech sectors, educational sectors, e-commerce, because our relationships and the way we've been building our business for, the last 20 years or so puts us in a very privileged position so that we can have relationships and opening doors and understanding regulation. And finally, what I would say is we do like disruptors, but we do like disruptors in consolidated markets. So one of the things that because we have the benefit of not needing to create technology in our market to create value. It's not like if we were doing investment, for example, in Silicon Valley, in which someone comes along with a deck about artificial intelligence and you say, you know what, I'm taking this risk. In Latin America, the risk that you take, it's a market risk. It's not a technological risk. So we have one of my partners is Christine. She lives in Palo Alto. So she's very immersed in the technological industry and understand what's happening there. And another one of my partners, we are 4 partners in the firm, Alvaro lives in Boston. So we get the benefit of understanding what's happening in the US in terms of technology. I spend a lot of time in Montreal, for example, in Canada, where there's a lot of things happening in the world. And basically understanding that and seeing what are those models that will work in Latin America, in Spanish-speaking Latin America, gives us the edge of actually investing in companies that are not as risky as the ones that are creating the technology. They are risky because they have go-to-market strategies in which we're willing to help. So that's a combination of what we're looking for in terms of investors, portfolio companies to invest.
That's I love it. That makes sense. From the outside, venture capital looked like very strategic, but in reality, it involved constant decision making, uncertainty, and long-term bets.
Yeah.
And right now, what feels like the hardest part of operating as an investor and supporting portfolio companies at Igna?
Wow, that's an interesting question. So I think you just put it as it is, in the sense that the challenging part of what we do is that the feedback loop on our decision-making process takes years. There are some indications that we actually did something right as the company continued to grow, but we are exposed to so many things that sometimes you would think, things are going really well, and then something happens and just the company just goes under. I think regulation is a huge challenge. I'll give you an example. We invested in a company out of San Francisco that was one of our first investments out of the 2023 vintage. It's a company that with artificial intelligence would connect in the communication channels of big companies, enterprise companies, would in an anonymate basis understand the clima of the conversations, of the corporate conversations, of the messaging within employees and all of that, and will create a thermometer of how was the engagement in those companies. Which, it was super interesting. The founder was actually a guy from Spain. He had moved to Palo Alto because he felt that the ecosystem would be better for this company to grow in the US. We invested. The company was showing probably, $1.5 million a year. 1 year and a half later, we were close to $7-8 million ARR. So big traction, good contracts. And suddenly the European Union starts this legislation about privacy and the use of AI, followed up by the US also administration. And the use of our technology becomes a liability because one of these big companies, a Canadian public company, fires a certain amount of people just because things were not going well for them. And one of the employees in their sue, when they sue back this company, argues that the technology of this company has profiled him or her. I don't remember. And even if we proved that this company had nothing to do with that and the suit was dismissed, the company could not afford all the lawsuits that were coming just because someone has already done this in the past. And the legal cost of maintaining the operation, the operation of all these legal things happening to this company, the easiest way to just close that liability was just to bring down the company. Did the company actually solve a problem? Yes. Did they have a good, entrepreneurial team? They did. Did they have a market? They did. Did technology work? They did. And then shit happens and then you die, just like the saying, right? And
regulation.
And the worst part of this is that it is a transition in the regulation. It's not even that the company was doing something they should not do, is that the transition between the text of the regulation and the use cases that were forbidden by regulation just was so broad that this and I think we are seeing that in many cases in the investments that we're doing at this point. So regulation for me is one of the biggest risks. It's something that you need to live with. I mean, at the end of the day, it's the nature of the beast.
Yeah.
But it comes to that. And it's difficult to anticipate because we are small players compared to all the interest of an industry. So regulators do pay attention to us, but not always will change course because they're political animals and they're not so much into business and bringing efficiencies. They're listening to their own stakeholders, which is natural, is the way it is, but it increases as there's technology shifts in what we're doing, increases the risk on a temporary basis in our industry.
Yeah, that's
Don't be sad.
that's too
We did a lot of
that's too
impress-
bad. Yeah, I know. Okay, let's keep fighting.
Yeah, we're optimistic. Otherwise, we wouldn't be doing this. Clearly.
No, exactly. It's the name of the game. You cannot win on every deal, like on a stock market. You mentioned during our pre-conversation that your work gives you strong exposure to what is happening in AI and innovation through the founders you meet. From your vantage point as an investor, what shift in AI or tech matter most right now, but is still underappreciated?
Wow, that's a really good question. Let me see. I think something that we underappreciate at this point is the potential usage of all the data that is being generated right now. We are starting to play with the usages of AI, but it's very difficult for us in general terms. Now, I imagine there are people that are very well, versed into this industry. It's very difficult for us to kind of assess how our life is going to change in the next, 15 years, 10 years. I'm just, as I told you, I have a podcast in which I read books with founders and we discuss them. And right now I have actually the day after tomorrow, we're reading this book, which is The Rise and Fall of the Great Powers. And it was kind of a surprise for me that the founder proposed the book. Since I'm asking for a favor, I don't define the books, right? I just read them. And there is complete chapter on the Industrial Revolution and the historic context of the Industrial Revolution and how that actually defined a breaking point in Europe between first the Spaniards in the 1500 years, and then in the 1600 years, the French guys, and then in the early 1800s, Great Britain, and how Great Britain changed completely its dynamics as a superpower in the world, scenery because of the use of the Industrial Revolution. I think we're just there. I think people that don't understand that AI is the new internet in terms of way of doing things, they will be left behind greatly. And what we have not been lucky, or probably we are lucky, but it's difficult for our generation to understand, is that we have had quantum breaks in our lifetime. So what I'm meaning by that is I had in my house a black and white TV when I was young. Now I don't even use TVs anymore. I have I have a tablet. What generation has had that in their lifespan? None. Because, except ours, I guess, because people that are born younger than us probably are very much into the technology, and the ones that were, my father was born in 1925. So, that gives you an idea. So I think what is coming back to business and what is the big challenge is to understand the potential of what's actually happening with artificial intelligence. How is that going to change our life, and how entrepreneurs can take advantage of that and build things with that and for that. And it's a huge challenge because you have to imagine a lot of things, right? I mean, how is going to be your next interaction with a computer in 5 years? You'll probably just think about it and things will just happen, right?
Yeah.
Right now, for example, you go to a foreign country, you put your earplugs and you speak to those guys in your language, and they will answer in their language, and you will understand them because you will have this feature about translation.
That's amazing.
How can you prepare for a world like that?
And it goes so fast.
And it's just the tip of the iceberg because, we're thinking about the things that are, available to us and commercially there. And so I guess my answer to your question, I think, is if you don't understand that your life is going to change significantly, if you don't educate yourself about that, if you don't have curiosity, and the last part I would say, and this probably will sound a little bit controversial, and you will excuse me for that, but I think there's two approaches to AI. I think there is the utilitarianism approach that I see in the US, in which most of the thinking is how many jobs will be let go because of this, how many people will just not find professional markets. And there's a little bit more European approach to it that has to do with the exponentiation of the human being through these tools. There's a guy that I like very much, a French guy. He's called Pascal Bornet. He has a couple of really good books about it, and he speaks a lot about how to be augmented by the AI instead of replaced. I rather think about augmentation than replacement, if you ask me.
Yeah.
So, I have my oldest son. He's living in Belgium, and he's studying right now lutherie, which is the making of guitars.
Yeah.
That job is going nowhere, right?
It won't be replaced.
I know, right? So we'll have a lot of more time on our hands. We'll have these type of conversations. We'll be doing this, and at the same time, something is happening. We just order it. We're not making it. it's super interesting if you think about it, but you need to be open to that. And that's why I think there's a lot of things going on, with mental issues and all of that, because there's a lot of anguish happening, particularly in young people. Part of the coming back to values and optimism and understanding that we can actually be better and build things better is super important, because we create the energy in which we live, and we need to build that in order, to preserve our quality of life, I guess. I'm sorry, this became philosophical.
Definitely.
That was not my intention.
I love it. No,
It's early in the morning for me. What can I tell you?
You drunk already?
I'm having my first coffee.
Coffee. Fantastic.
Yeah.
Okay. Then let's jump on, given the macro environment and evolving technology landscape, focus and discipline seems more important than ever.
Yes.
For investors.
Yes.
Then you jump 10 years, but maybe just looking ahead 12 to 18 months, what does success realistically look like for Igna and for your investment strategy?
So I think in many ways where we are right now, as we are investing a vintage that is quite recent. So we were lucky. We were fortunate because we ended up, fundraising from 2021 to 2023. We closed our fund 2024. So we had the benefit of having available capital to invest in a really good moment. As we were coming out from the party of the COVID, era in which valuations were super high and all of that, we came as that era was kind of finishing. So we ended up investing in sound companies with sound valuations. For us right now, what we are seeing is an acceleration in terms of our business cycle, which means companies are growing significantly because of the AI augmentation of their way of operations. And as we have been investing, roughly 30% of our capital is invested in companies in Mexico, and 70% is invested in the US, Canada, very small part of Latin America, Israel, and Europe. So right now, always companies that are growing into Latin America, but their head offices are in those places. So as interest rates, I believe, will decline progressively, we are expecting to see more liquidity in the markets and an interest of purchasing some of our assets. And again, we invest in seed extension, pre-series A. We will do a follow-up in a series A, in an A series, and then we'll go to B probably, but that would be like the latest. So basically what I'm getting at is, I think for us right now, what we are starting to see is probably some divestitures coming in the near future, in the next 18 months or so. And that will give us the ability to potentially in a year or so go for the next fund and fundraise, because the opportunities are there. And this is going so quickly that we are working hard to have capital available for doing those investments. Another thing is complicated to see when you don't live here is, and it's interesting because I think for Europeans, it's easier to understand this in Asia or in Africa. But the potential of Latin America is huge. In Latin America, if you consider Brazil also into the mix, we don't invest so much in Brazil because it kind of cooks in a different way than Spanish-speaking Latin America. When we do investments in Brazil, we always go hand in hand with the local fund. But the whole region, you're talking about probably 650 million persons, which average age is around 30 years, with a higher purchase power than Southeast, with a huge conversion rate in digital businesses, in digital business models. And as we were discussing about the internet connection, highly, highly, highly connected. So the opportunity here, if you think about the e-commerce percentage of total commerce in Mexico alone, which is probably the 10th or the 12th economy of the world, depending on how you measure it, it's around 9% of total commerce. The potential of growth is abysmal. I mean, it's huge. So, being able to invest in business models that will be serving those conditions is huge. And, part of our work is to be out there saying, guys, we exist. This is a really good place to do business. Right now, our funding comes mainly from Mexican pension funds, but we've been working for the last 15 years, opening new avenues with other type of funders and, making available investment opportunities from abroad, but coming to this market is what we're looking for the next 18 months or so.
Okay, I love it. I love it. And what sectors are you most excited about right now?
As a fund, we are sector agnostic. We don't invest in certain sectors in particular. And the reason for that is the depth of the market is not big enough so that we just focus in one sector. Now, having said that, if you look at our portfolios, what you would see is we are deeply invested or heavily invested in fintech. Because when you think about an ecosystem, you have to create the payment rails before happens the rest, right? So for the last, probably 10 years, we invested a lot in fintech. I recently did an investment which I really like. It's in health. I've been looking at the health space for a really long time and didn't find something that I liked. And I didn't find something that I liked because monetization is very complicated. And when you think about B2C or B2B, the churn in those business models is huge. The perceived value by the end customer changes a lot. So there's a lot of churn, and you can have a very efficient go-to-market strategy that returns a very low CAC. But since churn is high, you have to repurchase your own clients very, very recurrently, and it becomes complicated. So recently we find one that we like very much. It's called Mi Salud. It aims at the Latino market in the US and also the Mexican consumer market for telemedicine, and building up a strong repository of health information of the Latino market, which has a huge value from a artificial intelligence standpoint. It will enable other players to produce information and potential results with the information that we are capturing in the market. So I love it. Also invested in a logistic company, kind of continuing on we have fintech, we have e-commerce. Again, in this ecosystem, the next step is to actually deliver what you had to pay, you bought, then you have to deliver it. So not being too, sophisticated about it, just following what's happening. And one of the things we invested, one of my partners did an investment recently, which was super interesting, is a data augmentation with AI company. So instead of going and doing surveys all over the place, you use this company that creates synthetic data very quickly and very cheap compared to the service of the world, and will give you a statistical relevant information about projections on markets, proofs of medicines. So very interesting. And that's the type of thing we're seeing in the AI world that are just mind-boggling. You don't need to go ask people. You just have to create, kind of a sample, and then you explode this sample with data augmentation. And it's a company called Fergen out of Israel. That is doing this, and obviously the Latin American market was relevant for them, so we came into their cap table.
Wow, I love it.
Yeah,
Okay,
fun.
great. Yeah, good one. Okay, then let's what makes a funder instantly credible to your eyes?
Oh wow, nothing. We need to spend time together.
Yeah,
That's
good.
I've done investments through Zoom. In the pandemic, I did some investment just having, these type of conversations. Ability is built, something that is interesting in this world is we take risks about people. And there's always a world in which people lie and psychopath and all of that. My wife loves those type of programs in TV, so she knows a lot about psychopaths. Right? I don't enjoy that much, but there's always the possibility of someone lying to you. But this is a business in which you need to spend time with the founders. And you know what is also interesting is it goes both ways. You don't want to have an investor in your cap table if he's a pain in the ass. And I'm not founder friendly. I mean, I'm not the guy that's going to be cheering up, learn, you make mistakes. Don't worry. That's not me. But in many ways, you want someone in your cap table than when things get tough, he'll be standing by you. And on the side of the investors, you want to invest with a founder that understand that even if things are going really well, there's a moment in which things will kind of, not go that well, and that he can keep on going. I mean, and this is a resilience game. It's not, you don't need to kind of, in Mexico, we say, discover the boiling water. What you need is someone that actually keeps on going, keeps on going, keeps on going, and find a way to produce value because they've understood that what they're building is going to solve a problem. And
Love it.
it's a very human thing. And that is the place in which I think, this is a wonderful business because in many ways, there has been, and we've even tried to find correlations between, founders' profile and their possibility of success. But at the end of the day, and obviously there's a lot of things you can do there, and there's a lot of research you can put into that. But at the end of the day, it's about having tough conversations. It's about helping people to think about what they're doing and building up on top of that. And it's just spending time with founders and being curious.
Yeah, I love it. Yeah, this is great. You love what you do, and this is
I do.
beautiful. It's yeah, Fabrice. This is great talking, and thank you for joining. A strong insight into your journey, your investment perspective, and the work you're doing at Igna Partner. Thank you so much for joining,
No, thank you,
Fabrice.
Laurent, for having me. It's been really fun. I appreciate this is the best way to start my week. So I appreciate very much you taking the time and
Wonderful.
reaching out. Hopefully it's gonna be helpful for someone.
Definitely, and I hope we have the opportunity of do it again
Yeah.
pretty soon. If the audience want to join and learn about your company, where do they reach you?
So I think about Ignia, the easiest way is to go to our website, which is Ignia. It's easy. You can reach out. I'm in LinkedIn. It's Fabrice Serfati. I guess when you upload the podcast, you will have my name there. And unfortunately, there's not so many Fabrice Serfati though, so it will be kind of easy to find me. As I was telling you, I'm in YouTube also with the podcast. It's in Spanish because part of the logic is that there is a lot of materials in English, but not everybody actually speaks English. We actually read books, all of them, mostly all of them are in English, but the conversations are in Spanish. Now with translation, but that the name of the podcast is Read to Lead. You find it, YouTube, Spotify, Apple Podcasts, and all of that. And yeah, always available. Happy to talk. And if I can be of any assistance and, kind of helping out, that's what we're here for at the end of the day. So happy to.
Wonderful. I love it. Thank you so much. Great conversation. Thank you.
The
Thank you,
same,
Fabrice.
Laurent. Appreciate.
Thanks. And that's it for today's episode of AI Interconnect. And if you enjoyed it, share it with someone who's building the future, or better yet, someone who should be. And until next time, stay curious, stay creative, and keep building. Thank you, Fabrice. See you soon.